Hi there, Serial Trader here. I'm going to do an update on the major US indices, and apologies for the length between now and the last video, but I have been dealing with an injury that makes it difficult to sit down for too long and do these. But that's at least slightly improved at this point, and just want to do an update here despite it still being a little painful. So since the last video I did here, looking at the SPX wave chart, initially from that July peak to the August low there, I was working. We had an A down, coming up into a B, and looking for at least one more leg down in C. Now from the last video, we were somewhere in this upper range, looking for a breakdown. Certainly got a decent breakdown, but it didn't quite fulfill the typical expectations of just a ABC down for, say, a flat or a zigzag, where we would have at least met or exceeded the lows there that we made in early August. So to accommodate the fact that we failed to test or make a new low, despite having a pretty decent leg down there, this is kind of shaping up into more of a triangle formation from what I'm seeing here. So got an A down, B up. Now within the B, we had this complexity. So an A, triangle B, C for the overall B wave. That was a pretty tricky pattern in real time to watch and anticipate. Now we've had the C wave down, made the low there on the 3rd of October. A bounce up into a D wave, as I have it labeled. Another move down in E, again holding the lows, and now it looks like we might finally be starting a potentially new trending move up. So at this point, just tentatively labeling this as a completed contracting triangle. Now how this pattern fits into the overall chart of SPX, I mean, there's so many different wave counts at this point you could come up with due to the complexity. I'm not even going to bother. I'm just going to try and focus on the shorter term pattern at hand, which appears to be a contracting triangle. And if that's the case and the E wave low is in, you can certainly be bullish against that level, which is 28.92. Let's just call it 28.90 here on SPX. And it does look like we're starting something potentially more meaningful to the upside, although still some work to do here to prove it. But I mean, we'll get to the other chart in a bit. But for now, as long as that low holds, you're going to have to try and maintain that this is a triangle pattern looking to resolve to the upside here. Okay, so I won't focus too much more on that. I think I got my point across there. Now on the I think there's some candlestick chart here looking at SPX. I mean, just overall looking at this daily chart, if we just want to look at the technical, so the 50-day moving average is still well above the 200-day moving average. Both moving averages are still pointing upwards, particularly the 200-day. So the trend is still technically up. Have to keep that in mind. Even our shorter term moving averages are now pointing up. We're well above the T line. The 3 T lines cross well above the T line. So there's nothing particularly bearish about that in the short term. We are getting to the overbought condition here on the oscillator, but if we do finally break this range we've been in for quite some time, that overbought condition will mean a lot less once you've broken out to new highs. So maybe we'll pull back a little bit here short term, maybe fill this gap. Certainly nothing unusual about filling the gap, and in fact, essentially any gap you can find on the SPX chart, with very few exceptions, gets filled. So that might be a nice closing the gap trade setup, but also coincide, currently being close to that 50-day moving average. So that might be a nice entry point if it does present itself for a potential long, and that would certainly be against the key level here right now. Well, I'm putting this as a near-term key level, 28.92.66, but more importantly, that level really needs to hold, and that's 28.55.94. So yeah, that's basically the view here. Looks like a potential bullish breakout here forming on this chart as well. We'll go to the weekly chart and just see if we can get a read off of that as well. So on the weekly chart, still looks fairly skewed to the bullish side. And if we just look at the most recent weekly candlesticks, so a couple weeks ago we had this potential hammer candlestick. Certainly rejection of those lower prices during that week. We had another bullish hammer the week thereafter, and that real body actually engulfed the previous hammer's body. So kind of a combination of a bullish engulfing and a hammer there a couple weeks ago. And most recently, not particular candlestick signal, but still a positive week. And we still, we actually got above the weekly T line once again. So, I mean, everything here technically is still kind of oriented to the bullish side of things. Certainly no weekly sell signals here to look at. So there's really nothing to support a significant bearish move currently. And you do have that potential triangle thrust either coming soon or perhaps already underway in its early stages. Okay, so the Dow Jones Industrial Average, what do we got going on there? Very similar look, a little bit more of a sell-off there on Friday on the daily, but still overall basically the same picture as you have on SPX. Let's see on the weekly if anything significant there. Not really, it's perhaps a little weaker here short term than SPX, but largely the same pattern in play. Now on the NASDAQ composite, what do we got? So NASDAQ composite, interesting. This looks a little weaker than the other indices. Still haven't gotten past this 786 retracement of that initial move down that bottomed in the summer there. And let's see, could still potentially have an A, B, C, D, E. So this triangle pattern is basically the same despite not having quite as much strength here on some of these upward moves. So I'll give the benefit of the doubt there. And you can see we're still above the daily T line here despite pulling back a bit short term. So still have to give the benefit of the doubt to a bullish outcome at this point on the NASDAQ. Although just noting that it is a little weaker relatively to SPX. Okay, so on the weekly here for the NASDAQ composite, yeah, basically the same image. No real bearish concerns there on the weekly at this point. Okay, so that's the NASDAQ composite. Basically the same pattern in all the indices despite some short-term nuances there. Okay, so on the VIX, what do we got going on here on the VIX? Okay, well on the VIX, we haven't quite broken this little uptrend we've been in of higher highs, higher lows, higher high, higher low. We're right down here testing these lows. So let's see the important level there to remain in this higher low pattern here on VIX. What was that? 1331. So how low have we gone here on this? 1331. So we've literally got a double bottom here currently in VIX. So potentially we could look at a little bounce up or even another leg up here in VIX as long as that 1331 level holds. But it really wouldn't surprise me if we fade down and start making lower lows, and that certainly would coincide with further movement on the indices to the upside. But you can't ignore the potential here for a double bottom on VIX and perhaps an implication for some at least short-term weakness on the indices. But it's not overly clear, so we'll have to keep an eye on VIX. Okay, now on the VIX tool, what do we got here? So VIX tool, I think I was looking at this sell signal in my last video, and it certainly led to a decent point drop there. So when did we start getting below this blue moving average? What level was that at? We were around close to 3,000 on SPX, got as low as 28.55. So you got a good, well over 100 points to the downside if you count the whole move there. But at this point, we're actually back on a buy signal by the looks of it. Or we were back on a buy signal, but now it's just kind of more neutral again. So nothing overly clear here. I mean, we do have a bit of a divergence going on potentially here between VIX and VVIX. So you can see VIX is starting to make some higher highs, higher lows. And VVIX, not really much yet, just kind of testing its lows. So that's a little bit of a difference there, short term between, well, to make it more apparent here, measuring from basically the same area, you can see that VVIX dropped quite a bit and VIX did not, and actually started going up against VVIX's trend. So that's your kind of divergence between the two. Now, if we got above the red moving average here on VVIX, and if we break down more significantly here below the blue moving average on SPX, that could be another sell signal. So there's certainly no assurances here that we're just going to blast to the upside. Might need to come down here, like I said, and close that gap at least. But if that basically holds there and doesn't really break down, that could be a good long entry. But again, another potential sell signal using this tool, perhaps shaping up here. But not that I'd really want to play it with the ambiguity that's currently going on there on the charts. So that's basically my take on things currently. Probably won't do a whole lot of videos, so I don't know when the next one will be. It is quite painful to do this right now, but hopefully that was a helpful update at least. And yeah, that's it for now. Serial Trader signing off.